When it comes to saving $5,000 or $10,000 a year, you might think that it is an impossible feat. However, in this video, I'm going to show you some very easy ways to do just that, guys. Again, when you're thinking of your savings, emergency fund, debt repayment, what could you do with an extra $5,000 to $10,000 in a single year? Now, it might not seem like much, but adding it up over time, it makes a really big difference when it comes to being able to pay off debt and also being able to invest that money. Now, starting with number one, guys, cutting the cord. This, again, a lot of people have talked about. I think it was kind of a fad probably a couple years ago. Now, my wife and I cut cable. We saved $180 from Xfinity per month. That is right, guys. We dropped cable. We have a smart TV, which is just through Wi-Fi. So we went from a $289 bill with Xfinity. I know it seems kind of crazy, to $103 just using the internet with a smart TV. Now, there was an adjustment period to get the applications. Now we do pay for a couple of streaming services, which is roughly about $25 a month. And there's a couple, we actually have Verizon for our phones. Verizon gives you Disney Plus, it gives you Hulu, and it gives you ESPN for free. And then for another $10, you can get Netflix and you can get Max. So it's a pretty good deal for the entirety of the TV to have pretty much everything that you want to watch. But again, that saved us roughly $180 a month. When you look at the entire year, guys, that is a massive savings. Now, in addition to this, we've talked a lot about insurance, not only homeowners insurance, but also car insurance. Now, previously, I was actually with USAA for all of my insurance, life insurance, car insurance, homeowners insurance, umbrella insurance, everything that we had in its entirety was with USAA. Now, being here in Michigan, it was a lot cheaper. Got a couple quotes at like 10 different places. We ended up going with AAA of Michigan. AAA of Michigan saved us $1,600. That is right. And in a comparison, $1,600 a year was saved just on auto and homeowners insurance, which again is money in the bank, guys, to debt repayment and also giving you the ability to really invest those funds. Now, third one we look at is your cell phone bill. When you look at the cell phone industry, it is ultra competitive. When you look at AT&T, when you look at T-Mobile, when you look at Verizon, even when you look at plans that you can get a lot lower. Overall, we have 2 smartphones in our house that both me and my wife use, as well as an iPad. We pay $115 a month for those, which have unlimited plans, which does provide us, again, the Disney, the Hulu, and the ESPN Plus. And I know people that are paying north of $100 for one single line, guys. You can negotiate. Our plan is actually through Verizon. It is grandfathered in, meaning we're getting a little bit of a discount. Now, in addition, we do get a company discount. So the company that I work for, and a lot of larger companies do this to actually have you go with different carriers, but we do get a discount on our monthly bill. In addition, a lot of places give you a discount for automatic payments, which again is another percentage off your savings. Or even if you do paperless, guys, you can get $5 off for paperless. And I am one that is all about budgeting and all about saving money where I can and making sure not only saving the money, guys, is also just really knowing the quality that you're getting and making sure it is worth what you're putting out. The next one we look at is cutting your interest. That is right, guys. Looking at what we've done so far, you've saved a couple $100 if you're able to do everything like I was. Putting that on your high interest credit cards is going to be an absolute game changer, guys. When you look at this, if you have $10,000 of debt at a 20% interest, which we know is lower than the national average, you're paying $2,000 a year. Boom. That is just math there, guys. If you have $10,000 at 20%, you're paying $2,000 in interest per year, period. Now, when you really look at that and thinking of $10,000, when I see people that have $30,000, $40,000, $50,000 in credit card debt, which is running at 22 to 24% interest, you're talking $8,000 plus per year in just interest. That doesn't include the principal portion that they're putting in there, the money that they're actually putting towards the original bill. That is just the running interest that we have in that credit card debt. Now, looking at the next one, smarter investing, guys. This was really one thing that I had to get a hold of. So overall, when I looked at my 401k plan, I was in target date funds through Vanguard. That is right, guys. I was in a 2060 and a 2065 plan. But looking at the performance, the 1 year, the 3 year, the 5 year, the 10 year, looking at my investment portfolio in its entirety, over the last couple of years, it's yielded about 3 to 4%. Which we know the S&P 500 is much higher than that. So I actually pulled it out of all of those target date funds, put it into some large cap, mid cap, small cap, which are also available. Now, I know for a majority of people, I would recommend talking to your financial advisor or talking to someone at the company that provides the 401k, and they will talk to you for free, guys. They have people that you can talk to for free, making sure that you're in the best investment and in the best strategy. Now, because of this, I moved the entire balance that I had in those target date funds. We moved those over into, again, mid cap, large cap, and small cap. Over the past year, last year alone, we yielded about 26% return, which is kind of crazy when my entire portfolio being in that target date fund for almost 10 years didn't even see nowhere near exactly what it was. So overall, guys, when we look at saving, $5,000 to $10,000 in a year, in my benefit, in this one, I probably saved about $15,000 with the growth factor, with what I do have in there, with smarter investing. And not only that, guys, is the fees for investing in there were about the same, which is kind of crazy. When you look kind of apples to apples, the fees were a little bit higher, but the yield that we got in there was much, much greater. Now, number 6, we get into the side hustle. That is right, guys. YouTube like this does bring in a little bit of income, trying to generate a little bit on a monthly basis. And I really put it in terms of what it pays for. For instance, if I have a side hustle that makes $103 a month, I can pay my Xfinity bill with the side hustle. Boom, it is done. I don't have to take anything out of my paycheck, out of my take-home paycheck, because my side hustle does cover some of those expenses. And if you like the content that I'm providing, guys, go ahead and subscribe to the channel, give it a thumbs up, and let me know in the comments what you guys think as we continue with this list. Now, of course, credit cards. This is kind of a very, very heavy double-edged sword. With the majority of credit cards, not only do they give you sign-up bonuses, they give you incentive points, they give you promotional rates, but in addition, a lot of places do give you cash back. If you got 1%, 1.5%, 2% cash back, you can actually get a reward for shopping. Now, the double-edged sword with this, guys, is a majority of people who use cards do use cashback programs, and a majority of people that do use cards have a tendency to overspend with the justification of utilizing points when it comes to spending. So again, I'm going to spend $5,000, $10,000, whatever it may be a year on a card. The justification is that they're giving me 2% back, which is not worth it, guys. And as much as people try to game the system, as much as people try to get the cash back, there's a reason why credit card companies have billions of dollars and put an extraordinary amount of money into marketing. Now, if you are an online shopper like myself, guys, Rakuten is actually one of the places that pays you to shop. So you can actually go in there and we get a paycheck. I believe now it is every quarter through Rakuten that you can actually get paid to shop through there. So it's a pretty cool feature, and it is free cash back. You can pay with your debit card. You can pay with any method that you want, and you do get cash back on those purchases, which I absolutely love. Now, big one, which is super easy, guys, opening up those high yield savings accounts. When you look at the national average of a 0.3%, you can actually get a much better rate at a ton of places with those high yield savings accounts. For instance, M1, which I have a link right down below, that is where I have my high yield savings accounts. It does yield a 5% return, guys. So when you're parking your emergency fund, you want to keep it liquid. You want to keep it in a FDIC insured or NCUA insured financial institution. Put it in something that is at least earning you about 5% return, because that is where about the national average is for those returns. And of course, guys, with this, if you have, $20,000, $30,000 in an emergency fund, putting it away at 5% is going to yield you a very significant amount of money. Now, the next one we look at is scoring extra money from your job, guys. That is right. We are looking at the 401k match. Now, majority of people, and again, in our situation, roughly 70% of people are utilizing a 401k match, which means 30% of people are not. On the flip side, if you have a match, you're literally leaving free money on the table that your employer is offering you. It is an incentivized reason to put money into your 401k plan. And this is, again, kind of a part that Dave Ramsey and I kind of contradict at this, because I know he says pay off all your debt first, you're not going to get a match. I really feel like getting that match and then putting everything else towards debt is a priority just for the compounding factor. I know it's not going to pay as much as a majority of people have in debt, and it also depends on what kind of debt you have. If you're holding a bunch of very high interest credit card debt, okay, it might make sense to do it there. But if you're racing to pay off auto loans and things of that nature that are at a very low rate, it might be more beneficial to do the matching to make sure that you are getting that bonus money. And the final one, guys, going through your budget. That is right. Most people can save $300 to $500 very, very easy going through your budget and seeing exactly line item what you can go ahead and cut out. If that is impulse spending when you go to the supermarket, making sure that you make shopping lists. There are a lot of places, not only for the automatic payments, but we look at subscriptions. A lot of people have a lot of unused subscriptions that they don't use, or they're overpaying for things they forgot to cancel and thought they canceled. So there's another way to earn a couple $100, guys. So overall, when you look, again, big picture at an entire year, $5,000 to $10,000 is roughly what you can save by just tweaking a little bit of your finances. So let me know in the comments what you guys are doing to tweak that finance a little bit, saving some extra money, and I'll catch you in the next video.